Good morning, everybody. It's Tuesday, the 18th of April, and today I'd like to do the Cloud Chart ETF market review. We're going to look at the S&P 500 ETF, SPDR, as well as the ETF subsectors. There's the usual disclaimer. The S&P 500 ETF and the S&P 500 sector ETF subsector. So we're going to look at the cloud charts, Ichimoku cloud charts of these instruments, as well as the sector rotation that is taking place within these indices. Jumping straight into the Pro Real-Time platform, we'll start with the SPDR, SPY. Interesting here, we can see the markets lost support at the top end of the cloud. It's still in consolidation mode, drifting lower. It's found support at the front end of the cloud at 232.65 area. It subsequently rebounded from that area yesterday, with resistance now at the top end of the cloud here. So currently we still have a MACD sell signal that's active since 7th of March. We're now getting closer to key support zone where one could take a position for a swing trade as the market rebounds from this cloud chart support zone. So watch the levels 232.60 and 231.45. These are critical levels to watch in the SPDR ETF. So support is around these levels, with resistance at the top end of the cloud here in and around 235 and 236. So there's potential for the market to head back to that level. This is a consolidation pullback with support at the bottom end of the cloud. So waiting patiently for this MACD signal to come through to see when we'll go back into the market from a long trade perspective. All right. So jumping straight into the subsectors, materials, XLB, fighting for support here at the bottom in the cloud at 51.45. It's a critical support zone. So it looks like we want to rebound from this level. A very encouraging candle there. So potential rebound potential is back up to the top end of the cloud here for resistance at 52.46. So there's a good couple of $3 to $4 in that trade based on this potential rebound. The negative risk is the front end of the cloud is actually did a cloud chart twist, as we say. So the front end of the cloud indicate that there's a long-term downtrend starting to emerge. And you are trading counter trend now with the potential rebound for going long in and around these levels, with the top end of the cloud as key resistance as a short-term swing trade within an overall long-term rolling over consolidation period for the XLB. Real estate, XLRE. Bit extended, we can see here we are fighting old cloud chart resistance here, the top end of the cloud. So expect this market to consolidate somewhat. I'm watching very closely for a potential profit-taking MACD sell signal to come through. But watch these levels, 32.44 and 32.73 are the key resistance areas. So we could see a bit of a reversal, consolidation of the recent move back down, but we had a successful rebound at the top end of the cloud here, a couple of dollars higher now, and now we're fighting these old resistance levels. Okay, so watch very closely. When it gets to 32.73, you could be looking at taking some profit off the table at that level. Okay. Consumer discretionary, XLY ETF, remain in a sideways range-bound price movement. We're looking at support here, bouncing off the top end of the cloud here. We can see it's 86.68. It's a key support zone, as well as the bottom at 86.34. So it's moving sideways within this trading range and looking to rebound from the top end of the cloud here. Still not had a strong MACD buy signal, so there is still downside risk towards this 86.38 zone. Consumer staples, XLP, also similar situation, trying to rebound from the front cloud support at the top end of the cloud here at 54.94. So watch this level closely. Any potential weakness to dip back into this trading zone or the support zone could be viewed as an entry point. Very interesting. We've had a MACD buy signal here, so we can see there from that MACD signal there at the bottom. Early days, but we could see it grinding back up from this cloud chart support rebound, so to speak. The energy select sector, XLE, in a spot of trouble now, as we've been trading below the cloud for quite some time. We're fighting with 69, 68 support levels here. It looks like it wants to retest these levels. Cloud is resistance. So watch out for a potential rebound, a short-term rebound back up to the bottom end of the cloud when it gets to these 86, 62, and 68, 62, 68, 70, and 68.50 zones. Front end of the cloud still indicate that we have a downtrend in place. So downside weakness remain. Financials, XLF, in a spot of trouble here because price action is taking place below the cloud. We're now fighting for support here at this 2285 level as a key cloud chart support zone, which corresponds well with this other low here back in January. So it looks like it wants to rebound from this level. Possible rebound potential back up to the bottom end of the cloud. So watch out for resistance here at 23.89. Still not had a MACD buy signal, so it's early days. But we are looking for support to come back in here at 2285 in view of the lagging line of the cloud rebounding from this support zone within the cloud. So it's a critical cloud chart support zone. Okay. Healthcare XLV, fighting for support at the top end of the cloud. Critical week to see if support will hold at this level. Downside risk towards 73.56 and 73.76. So it can dip within this cloud, but looking for a potential rebound to come in at these support levels. Okay, so watch it very closely. We've not yet seen any MACD buy signal, so there's still downside weakness towards the bottom end of the cloud. That's the downside risk. Industrial XLI, dipped below the cloud, retested the old low of March the 27th. So we're back down at that low, which corresponds well with that cloud support zone, as well as the resistance zone it broke past here. So it's at a critical resistance zone, back above the bottom end of the cloud. So it's grinding back up, and with the resistance at the top end of the cloud at 65.60. Still not had a MACD buy signal, so the downside risk is still there. But we have a short-term retracement trade, the possibility for short-term swing trade, retracement trade back up to the top end of the cloud. Technology, XLK, also in consolidation mode, looking for support to come in here at the top end of the cloud, pretty close to that area at 52, 52.38, 52.40. So watch that cloud chart level closely for a potential rebound at that area. Still not had a MACD buy signal since the sell signal back in March. So looking for a consolidation to come in and around these levels. A potential rebound to come in and around those levels. Utilities, XLU, fighting old highs for resistance here. So we need to see a breakout past these highs. Otherwise, we could see consolidation back to the top end of the cloud. Still not had a MACD buy signal. MACD still remain valid. So we need to see a breakout past these levels to be interested in this particular ETF. But so far, the downside risk is a drop back down to the top end of the cloud to test these support zones. Okay. But back to the S&P Spider SPY. Critical week, looking for support to come in here. It tested it yesterday, 232.60, that low there, 230.30. It's a key support zone. Any snapback here could be seen as an entry point for a trade back up to the top end of the cloud here, but we still not had the MACD buy signal, so it's early days in terms of a retracement rebound trade. Okay. Until next time, happy trading.